quality education, training, and this is then government organization created by an act of parliament. And our main sources of income is also from the student and as well as from the government. And we have the different tax and other fiscal benefits as well in order to be efficient in discharging our responsibility in the Bangladesh. This institute is run by council member, government from the different ministries, and 16 we are basically nominated or elected by the member. We have near about 1,800 members, active members. So this is in a nutshell. We have taken this privilege because most of our participants, they have not joined till we have seen 37 members have joined, and rest of the people definitely will join within few minutes. And we have also another one, our vice president, MD Akhtaruzzaman. He also joined with us. His name is Akhtaruzzaman. Okay. So he already joined with. And so we can start our webinar. Today's our webinar topics is how fintech innovation drives inclusive finance. Definitely, you know that innovation is a common phenomenon all over the world. Now it is the global trend, we can say. As a finance professional, definitely we have to know how to materialize this technological innovation in the finance. So today's topics is basically have more attraction to the professional accountant, those who are contributing in the economic development of the country. Today's in this session, we will find our keynote presenter, Dr. Mohammad Abedin, Senior Lecturer, Accounts and Finance, School of Management, Swansea University of UK. And we have our discussion with us, Dr. Taimur Sharif, Professor Economics and Finance, Dean, SME, University of Kurdistan, Haplar, Iraq. And we have our session chairman, our council member, past secretary of the Institute of Bangladesh, MD Kausar Alam, FCMA, and he has also chartered accountant degree from the UK as well. So with these few words, I would like to hand over the microphone to our session chairman, MD Kausar Alam, FCMA, to conduct this session. Thank you.
Thank you very much, Honorable Moderator of this very high esteemed session, Mr. Mohammad Abdul Motin Patwari, Council Member and Treasurer of Institute of Cost and Management Accountants of Bangladesh. Today, we have this session webinar on how fintech innovation drives inclusive finance. In recent years, I would say over more than 1 decade, fintech became a revolution across the globe. It has significantly matured in the Western world. For our part of the globe, particularly in Asia or Southeast Asia, it is still evolving. So for us, we are grateful to our two significant personality, resource person of today's presentation or webinar, and also two are aligned like this keynote speaker, Dr. Mohammad Abedin, Senior Lecturer, Accounts and Finance, School of Management, University of Swansea, UK. I would extend thanks on my personal behalf and on behalf of the ICMAB to our keynote presenter for kindly making the effort, making the presentation, and also joining us today in this esteemed session. Thank you, Dr. Mohammad Abedin. I would also happy to welcome our very distinguished discussant of this webinar, Professor Dr. Taimur Sharif, Professor of Economics and Finance, Dean SME, University of Kurdistan, Hewler, Iraq. Thank you, sir, for your kind consent to join us this session as the esteemed discussant of this particular webinar. This is of a great significance for us at the Institute of Cost and Management Accountants of Bangladesh, since we always thrive on gaining knowledge on modern topic for our members and also contribute to our professional arena and the nation as a whole. So of today's program is very timely, and we are very grateful to both of you for extending support in organizing this particular webinar for our members to enlighten our knowledge so that we can be up to date with the things happening in the Europe and also in the Asian part, Arab world also. So FinTech revolution actually in Bangladesh, as we all know, over last 2 decades, digitally Bangladesh has taken significant effort from the state level to corporate level. So as part of the global movement of fourth industrial revolution, like artificial intelligence, blockchain, mobile financial transactions, cloud accounting, in many ways, these are examples. Bangladesh also have evolved with the digitization approach. But FinTech is even more significant. We would learn from you. I have not have much knowledge about this particular topic, but as a matter of setting the ground, finance and technology both together actually evolved. Use of technology in finance has evolved as the FinTech, or otherwise you can say it is marriage between finance and technology. Earlier, accountant used to be meant as like bin counter or making accounts or basic financial statements. But in modern days, the situation or arena has significantly changed. So we can ask ourselves why this FinTech thing or digitization of finance thing is important for us. If I know, I be very brief and neat and allow more time for our honorable presenter and discussant. I just want to highlight a few points like, so the very reason for FinTech is to actually harness the scope. We always call economy of scope, but now scope is multiplied. Also to harness the benefit of scale, speed, and also in the globalized world to cope with the competition of the market economy. Of course, FinTech is all about real time, and also it is efficient in all respect. In particular, it is also cost efficient. So in Bangladesh, we have huge population, 173.8 million population. So as far as various digital statistics are concerned, like our mobile reach is 105%. That means more mobile set than the population as a whole. As far as social media is concerned, our Facebook attainment is more than 50%, it is around 55%. So accordingly, there are like similar YouTube, we are of the 173 million population, 20% approximately have YouTube reach. Instagram, it is still poor. It is 3% of the population, 6.5 million. In LinkedIn, we have 4.6% of population, 8 million population is there. In Twitter, or presently it is X, we have 1% approximately of population are there. So these are few numbers, though might hear irrelevant, but today social media also encompasses significant part of FinTech transactions or FinTech capability development. So on that count, I just cited a few digital places or digital development in our part of the globe. So regarding the financial inclusion, the last part, what actually the ultimate output part of the financial digital technology or FinTech. So in terms of financial inclusion, Bangladesh actually was very poor. It was below 30% even 10 years back. It is somewhat now 50% plus financial inclusion, but we cannot say that it is efficiently run or managed. There are still huge underserved population, those who are not in financial systems. So being financial systems is no longer a luxury. Actually, it is a need for many reasons, as I have already mentioned, for managing scale, scope, speed, competition, so many other things. Also, importantly, financial inclusion is important because to check and balance corruption. Actually, the moment there is a scope for cash transaction, that means one is having room for hiding something. So this digitization is a significant tool for actually establishing transparency across. That's why developed world, there are countries like in Europe also, to the extent more than 90% or to the extent 100%, they are actually digitized. Even to give a small toll at the public toilet, they can use their card. So to that extent, they have been. So in our part, actually, as we hear, those who keep interest, like we have significant issue to do in terms of curbing corruption. So this financial inclusion and digitization would be a significant tool for helping us in terms of curbing corruption in our part. So I would not take much time on this particular special topic. We have our very distinguished presenter and also discussant present here. I would take a few moments to actually present the credentials. So for the benefit of time, I would like to take both credentials together since it is not much, so that I can allow our presenter to present, and subsequently our honorable discussant can have his valued discussion at Beluga, and also we can take questions. Our moderator is there to help us. So let me take the credentials. So with the permission of our honorable resource person and discussant, I would like to take first the credential of Professor Dr. Taimur Sharif. He is a distinguished professor and Dean School of Management and Economics, University of Kurdistan, ULR. It is in Iraq. Dr. Sharif is a Dean of UKH, School of Management and Economics, SME. He is also has a profound career of working for diverse range of universities in the UK, the MENA, Middle East and North Africa region, and South Asia, and over last 25 years. He is a senior HEA fellow and recognized chartered management manager in UK and Canada. Professor Taimur is currently an external examiner in the University of East London, Leeds Beckett University, and Mahsa University. Till date, he has examined nearly 40 PhD and theses for universities in Australia and UK. Professor Taimur was invited junior of the International School of Business Talent event in 2021 in the Netherlands. In the academic arena, Professor Taimur has done his PhD in International Business and Economics, London South Bank University in 2001, MSc coursework and quantitative method in economics, Stockholm University in 1998, MA in economics, Aligarh Muslim University in 1996, BA honors in economics, Aligarh Muslim University in 1994, and earlier he has done his undergrad. Professor Taimur has over 60 publications in leading ABS and ABDC listed journals, Scopus listed conference proceedings. His recent areas of interest in economics and finance have energy economics and EKC stocks, energy, bond market, volatility, spillovers, cryptocurrencies, investors, sentiments, ESG, and so on. So I would again congratulate Professor Dr. Taimur for his very high esteemed credentials, and also thanks for joining to this session as esteemed discussant. Now I would take the credentials of our honorable paper presenter, Dr. Mohammad Abedin, Senior Lecturer, Accounting and Finance, School of Management, University of Swansea, UK. Dr. M. Abedin is a Senior Lecturer in Finance, FinTech at the School of Management, Swansea University, UK. Earlier, he was Senior Lecturer in FinTech with Teesside University, UK. Dr. Abedin has advanced analytical skills for both quantitative and qualitative research. He is an experienced data analyst and project evaluator and specialized in FinTech, data mining, and big data analytics. Dr. Abedin is actively engaged in research activities, project dissemination, guest lecturing across various disciplines, nationally and internationally. Dr. Abedin has published more than 50 SSCI and ABS listed research papers. His research works appears on leading peer review journals, including IEEE journals on industrial informatics, Annals of Operations Research, International Journal of Production Research, International Review of Financial Analysis, International Journal of Finance and Economics, Journal of Environmental Management, International Journal of Systems Frontiers, to mention a few. Dr. Abedin is an associate editor of the International Review of Economics and Finance, Journal of Global Information Management, and Dr. Abedin is working as a guest editor of Decision Support System, Technological Forecasting, and Social Change, and Annual Annals of Operation Research. Thank you again, Dr. Abedin, for extending your kind support and presenting the paper today. So without any further time spending, I would straight away go to our paper presenter, Dr. Mohammad Abedin, to kindly present the paper. Then we would actually go to our discussion, and also if there is any question or point of clarity, we would take this in between. So over to Dr. Mohammad Abedin.
Thank you so much, Mr. Kausar Alam, FCMA, and other distinguished fellow from ICMAB. And it's a great pleasure for me as well. And it is very first time for me to working with the ICMAB. Although I am from Bangladesh, my graduation from Chittagong University. Professor Dr. Salim is my teacher from accounting department. I got graduation from Chittagong University 2007, my MBA. Then I have, couple of job in across the universities, public and private universities. Then having PhD, then back to the China. Yeah, back to now in the UK with Swansea University. So yeah, I am working with FinTech and machine learning data analytics. After, having, sharing my slides with you today, it is presentations about the presentation. Have you seen my screen,
coming,
please?
Yes, we can see now.
Yeah. Let me do it. Yeah. So this is the presentations today. It is yeah. So it is about the FinTech. My research and working area. I am working in FinTech and data analytics, machine learning, big data analytics over the year. And today's topic, it is about the FinTech innovation, and it is the inclusive finance. And we are getting the example. I'm taking an example from new banking. It's a new banking system. And today we talk about a bit of details about the FinTech and also the inclusive finance, how it works and correlate to the new banking. So it is kind of my, my introduction, although Mr. Kausar, he put a lot of introduction from me and from Dr. Sharif. So yeah, this is my publication. I've published books, couple of books as well in business intelligence and cybersecurity domain, as well as machine learning and deep learning domain from the Taylor and Francis and Springer groups. I am working as an associate editor. I have a couple of associate editor positions as well as guest editor across the journals and across the academia. So yeah, today's topic, it is about the FinTech and it is inclusive finance. We're gonna have a look about the abstract. I'm gonna, align one example, one empirical example today, how the new banking systems correlate to the, collaborate to the FinTech and the financial inclusion. So here it is the kind of, it is one empirical example we take here. It is the impact of FinTech. And in particular, it is the new banking in case of inclusive finance. And we are getting data for 72 countries across the 2017 to 2020. And as a methodological approach, we are going to use the OLS and also the quantile regression methodology. And it shows that there is a significant impact in the financial inclusion, introducing the new banking system across the sample region, and it is the has also the relationship with the traditional banking services. And in the later part, it talks about the institutional quality, how institutional quality have an impact and have significant issues on the FinTech and the inclusive finance, financial inclusive. So it is this is study, and this topic is about the inclusive finance. It is about the innovation of new banking system. Although the new banking system is not densely studied across the literature, it is the in the FinTech domain have many tools and techniques available in the banking system and also in the other domain. So the new banking system is it is the new approach and new innovation, and it is kind of alignment to the digital banking system in contrast to the traditional systems and traditional facilities. So this this webinar, it is this paper and this study, we're going to talk about the empirical investigation, how this new banking system, new banking approaches contribute to the inclusive finance in terms of the various segments. So it is the brief background of the FinTech. Although FinTech is start from early 1990s, 1980s, so it is kind of collaborations. What Mr. Kausar mentioned about the FinTech. What it is the FinTech? It is kind of collaboration to the banking systems, to the traditional systems, and the technological innovations. Nowadays, it is the FinTech. Nowadays, it is the artificial intelligence. It is actually the big data analytics and decentralized finance thing. Also, it is widely applicable to the accounting systems as well. So this is kind of collaboration to the traditional as well as innovative system and new tools and techniques. What we called it is the FinTech. So yeah, it is the digital technology, and it enhance the customer services, enhance the people lives as well. It enhance the the regional scenario also, in the domain scenario also. And this sort of innovation definitely reshape our life. It reshape our life. It minimize the challenges that is available in the traditional systems across the domain, not only in the banking sector, rather across the sector. It gonna, it reshape and it improve our systems. It improves our services. So this is kind of little background and a brief background of the FinTech. So it is, again, it is enhancements to the system, enhancements to the financial services across the domain and across the country and the region. And it is the online payment, it is the mobile services, it is the shopping or online shopping, and it is also the banking system. Also the bank varieties of services banking provide to the customers. So all depending on the situations and depending on the services, the FinTech and the technological innovations, they're gonna solve the issues and to provide the guideline for the way out and for the further movement. So it is the how actually the fintech nowadays come to this to today's scenario. It starts from the 1950s and 1970s. It is the electronic transfer system in the very early age. Our senior citizens and senior generation, they're gonna use the electronic transfer systems. And what is happening, it is the 1950s and 1970s, then 80s and 90s, it is ATM system, electronic transfer system, automatic system available. For example, it is a SWIFT code and SWIFT services for the banking system for transferring the money. And then it is the internet and mobile finance comes up in early 2000. It is banking and digital payment system, for example, PayPal and other services comes up during the 2000. Then 2010, it is the age of the smartphone, age of the digital devices. So it is kind of blockchain, and the initial adoption of the cryptocurrency comes up in 2010. Then 2015 and 2020, it is kind of big data revolution. Nowadays, across the domain, it is now age of big data. We call it is the age of big data. Okay, data is generating, trillion and billion data generated from the social media. That's an example. Also from the corporate sector, the financial sectors, and the accounting and other domain as well. So no matter which domain it is, starting from the business to the other sector, it's a kind of big data applications, and with collaboration to the intelligence applications, for example, machine learning, and the big data and the blockchain, decentralized finance. So these are the things comes up. Nowadays, this is the age of big data, and this is the age of decentralized finance. Now in the trend, it is decentralized finance. Decentralized finance thing, decentralized issues is not only in the finance domain, but also it is the other domain as well, accounting and the other banking and marketing, the other business domain also, and non-business domain also. They're going to apply this sort of tech tools and techniques, the blockchain thing. So this is the kind of cycle, how starting from the 1950s and 1970s, how the big data actually shape our days and shape our life and services. And we are facing getting the services from the big data, from the financial technology tools and techniques. So here the new banking and inclusive finance scenario. We're going to talk about the new banking. What it is the new banking background and concept. What is the features actually shape the new banking? Now, what are the challenges comes up during the in the region, for example, in Bangladesh and India. So it is the banking system that is actually no officeless bank. What we call the officeless bank in across the globe. There is a traditional banking system nowadays. And the traditional banking system comes up from the early ages. Then in the Middle Age, the mobile banking system. Nowadays, actually no physical locations. I mean that require. We have only the mobile devices. If we have the mobile devices, we can getting the services from the banking and other facilities. So unlike the traditional bank, the new bank offers services through the mobile apps and online devices, including all kinds of the facilities, all kinds of applications. For example, it is the savings accounts, it is the peer-to-peer transfer, it is the budgeting tools, it is the accounting, and it is the marketing and other sorts of tools and techniques that gonna have by using the app and by using the very specific services from the banking system and the mobile app system. What we call that is new banking. So it is the user-centric approach. It is the user-friendly. It is the customer-friendly, the banking system. So it is by using the apps and online platform, it making the banking transactions and banking services accessible to our doors, and to provide the service to every step of our life. So it is the tech-based generation and tech-based services in contrast to the traditional one. And what we call it is a branchless banking. There is no means of the physical, the physical door and physical offices for the new banking systems. So it eliminate the physical branch visit, it reduce our complexities, It minimizes many complexities. It saves our time. It saves our money. So this sort of model, this sort of banking technique significantly reduce the unbanked population. I mean, it gonna, it gonna add up the many peoples. It gonna include many people to the services. The people, those are in unbanked, those are not able to getting the banking services. So this sort of technique, invite the people and add the people to the services, what we call the inclusive finance and inclusive services. And it is the, it enhances the transparency. Definitely, it enhances the, services and the payment transparency. So it uses the data analytics and artificial intelligence tools and techniques to provide the banking services, financial services as well. It definitely enhance the transparency, and in all aspects it minimizing the charges, and it minimizes the fees also. So it is the integration, it is the collaboration to the digital platforms and digital techniques. So often it integrate the e-commerce, follow up the e-commerce facilities. It's actually sharing the platforms and providing the comprehensive, seamless, and the physical toolsless banking services. It expand our lives, it shape our lives, and facilitate our services. So there is a sort of challenges to the adoption and innovation of those new banking tools. Yeah, despite their convenience, many consumers hesitate, to adopt this sort of techniques, because if we talk about the Bangladeshi scenario, if we talk about the marginal people in the country, so all segments, all marginal people and the remote area people, they may not available to get these sort of services, because there is a lot of infrastructure problem in the country. So yeah, that is the quite challenging to to facilitate and to provide to include the people all from all classes, from the all marginal classes in particular, to getting the service. So this is kind of one it is the challenges. And the new banking also, it derives the financial and bridging the gaps to the access to finance. It is the customer centric approach, and it enhances the accessibility, and it enhances the the integration, as well as it enhances the services, and it enhances the more research oriented techniques. So in the ongoing process, in the later part, actually we need to think about how it gonna be the more inclusive to the marginal people, and to the all class, across the classes, to get this sort of services. So for our models and data, we're gonna the financial access, this is our dependent variable, and the inclusive new banking system, we have a couple of control variable also. This is the new banking system, this is the country's GDP system, this is in traditional banking system, it is the population, urbanization, institutionalization. So these are sort of variable here to to measure the access to the new banking, and to measure how new banking collaborate, and how new banking contribute to the financial access into the domain. So we're gonna apply the quantile regression here, depending on the quantile scenario, and making the regression series, and also come up with the results to measure the significance of the inclusiveness in terms of the new banking systems. So here the data comes of the sample data, it is 2017 to 2020. And it is the main variable, it is the financial development index, and as well as it is institutional quality index. And the concept, it is the inclusive finance. Definitely we measure the inclusiveness by using the new banking technique. And the key independent variable here it is the new banking, and also other control variable, it is the trade openness, it is the country GDP, it is the population growth, urbanization, it is the internet accessibility, what we call the penetration rate. And we apply the pooled OLS technique and 3-stage least square methodology, what we call the 3SLS regression model, to measure the endogeneity problem, to minimize the endogeneity problem. Also, we're gonna have a look the robustness checking in the later stage of the modeling things. So here it is the data description. So we are using the here it is the 2017 to 2022, and it is the panel data. It is panel data, and the data we are measuring almost 50 countries data here to measure the inclusiveness by using the financial new banking systems. So Malta has the lowest number of new banking user. It is the least developed country, kind of least developed country, LDC kind of Bangladesh. So it is the new banking user, and definitely it is US #1 in the top position. Then the other countries, for example, Brazil, Russia, and the Britain and India, the countries which has the large number of banking user, new banking user, according to the proportion of the population. For example, Iceland, they're gonna have the adult population using the more accessible finance, for example, new banking. Then following the countries Britain and Denmark from the European scenario, and the extreme values included Ukraine. It is the GDP growth rate now it is negative because of the kind of varieties of event across the country, and the population growth rate also the kind of disaster because of external forces or external awareness and varieties of scenarios. So the correlation analysis, it is the new banking has the positive correlation to the access, I mean the inclusive finance and the services that we provide via the providing the through FinTech service. So it is implementation the new banking system. So the correlation, it shows the correlation to the other variable as well. So here it is the new banking and inclusive finance, from the pooled OS regression model, and the account access. New banking has the significant effect. The coefficient it shows 0.50, 0.58, and the savings new banking has no significant effect on the savings ratios and the savings rate, as well as the borrowing has the new banking has the significant promoted lending. For example, it is 1.39 with this 1% significant. And the account access, depending on the account scenarios, the 50% quantile, it shows it support the pooled OLS regression results. In terms of savings, it is the new banking has the negative impact, and in terms of borrowing, it has the positive impact on the borrowing, but in terms of savings, it is negative impact. And the FDI, Financial Development Index, it shows the new banking has the significant effect. It boosts up the inclusive finance, definitely, but it varies from country to country and region to region, because a lot of the backdrop available across the countries. So also institutional quality has a significant positive impact, definitely, to the financial services and the FinTech inclusion. And here we're gonna measure the COVID-19 scenario, what it was happened during the COVID-19, beginning the COVID-19 and after the COVID-19. So the new banking coefficient 1.39, it is 5% significant. It indicates the new banking system and the bank has increased the services. This is the before the COVID-19, but during COVID-19, what it happens? It indicates that every unit of the new bank are going to access the increases of the service gonna increases. It is because of varieties of scenarios during the COVID-19. People gonna working from remotely, so they're gonna use the banking system, mobile apps, and other digital services. So the bank FinTech access gonna boost up during that period. So on the whole, the influence of the new banking, it a bit of weakened during the COVID-19, but still it is significant. The robustness, we're gonna talk about we're gonna check the time fixed effect regression. The results are consistent with the main model. The new banking significantly promote to the account access as well as the lending and the impact of savings and other variables as well. So whether this sort of system, the new banking, what you call the new banking and the branchless banking system in particular, the branchless banking system and remote banking system, what we call it is the remote banking system. Based on the FinTech, it is suitable for the developed countries, no worries, definitely. It is also, widely applicable to the underdeveloped country, LDC, like Bangladesh, India, and the Chinese systems. And the other part of the African region, the LDC, but it have subject to think about the technological infrastructure, economic development, and the regulatory environment, the support from the government and support from the regulators. So this gonna shape the how this sort of banking system, how this sort of fintech system gonna be applicable to Bangladesh and other LDC. So it is definitely the mobile infrastructure, I mean the technological infrastructure from the Bangladeshi point of view. So mobile network coverage, although the mobile network coverage is very strong in Bangladesh, but it is challenging for the remote area. And the infrastructure, that is another challenging area, as well as some part of the Indian situation is far better than Bangladeshi system. And also China is a very strong situations in compared to the Bangladesh and Indian point of view. Economic development for the, to the steady growth and the equal growthness of the fintech and other, the other high-tech system, the economic growth is one of the significant factor. We talk about the GDP, how it correlate to the GDP, how contribute to the GDP, contribute to the fintech access and the new banking system. It has the positive impact to the GDP and the fintech and the new banking system. So it is definitely economic growth is one of the major factor for the inclusion and the microfinance. So in Bangladeshi environment, the low income levels in particular the marginal area and the limited financial literacy also, can make a negative impact to the fintech adoption and fintech inclusion. And Indian scenario is better than Bangladesh. Definitely, Chinese scenario is the far better. Although the economic imbalances have across this China in the rural, I mean the some different part of the China. So it has some economic imbalances and also the economic development index imbalances as well. And also the financial inclusion criterion. It is the mobile financial services like bKash is one of the established in the market, in the Bangladeshi market. So they're gonna contribute more to aiding the more people, to aiding the remote people to the banking services. And despite the progress, rural areas still have the challenges in trust. Also, the trust is the one of the main thing, and access to the other financial services. And we also measure the Indian and Chinese scenario. For example, in China, Alipay and WeChat Pay is the very popular for the financial inclusion and the fintech inclusion. And it is the regulatory environment. So for the Bangladesh has the very supportive policy from the Bangladesh Bank and like other regulatory bodies. And ICMAB is one of the contributing factors in the Bangladeshi environment and Bangladeshi economy to access the people and to add up the people to the system. And yeah, it's gonna be the more strength, and it's gonna be the more system oriented, I mean the regulatory bodies and the regulatory authorities from the Bangladeshi perspective. And also the Indian and Chinese, we measure the Indian and Chinese scenario also, what is happening in India and in China. Although in all aspects, India and China is in the good situation in compared to the Bangladesh. So the new banking system, what we call the fintech based new banking, it has a great potential for Bangladesh, for example. Although we faces many challenges for the technical infrastructure, for the economic development, also from the regulatory bodies, from the regulatory environment, and also definitely government and the private sector has the more chance and more huge space to contribute, especially the private sector, to collaborate to the financial sector and to improve the infrastructure, as well as to improve the life of the marginalized people. And yeah, it is again the regulatory bodies, regulatory framework that's gonna be the take care definitely to get the acceptance, to add up the more people into the system. And also it is one of the trust people gonna be the banking system, the remote I mean the remote area people, the marginal area people, they're gonna be have the more trust and the faith to that system. For example, mobile technique, for example, bKash, what they are doing into their service into the market. Yeah, that's the another thing. So these measures definitely will help the system, will have the, improve the service, the fintech based banking system in the area like Bangladesh, also in the, Bangladesh, I mean the remote area in the country. So it definitely boost up it have the contribution, it gonna be contribute to the promoting the economic growth as well as social progress and other dimension, other social dimension as well, to add up the more people to the system. So here the findings, the role of banking, the new banking is progressing, and it is promoting the financial inclusion, definitely. So this study found that new banking significantly promoted the inclusion, definitely. And in terms of the access, in terms of the lending scenario, and it has the it boosts up the savings, it encourages people to save more to the banking system. So research shows this sort of banking is, although it has no significant influence, but in the throughout the check of the regulatory, improving the regulatory system, improving the the fintech services and the mobile devices and other and the tools and techniques, it gonna improve the savings. And it has the institutional impact as well, so has a significant role to the promoting the inclusion, financial inclusion. And definitely it has the many practical significance and many utility and applications for these services and for this sort of approach for the new banking. The new banking ability to cover the poor communities, what we call the marginal people. It enhance the, it extend the life, it improve the quality of the life to the rural people and the marginal people. And it also works as a microcredit loan, for example, a small loan. And regulators can encourage the new banking system. I mean, the regulatory bodies can get the many applications, many tools to how they gonna contribute to the, shape and develop the banking system, improve the banking system. And it promote the implement the mobile banking as well. And ensure the regulator, definitely government and other regulatory bodies, including the Bangladesh Bank, they gonna, how gonna the new banking system implement to the Bangladeshi financial market, as well as to the in the other remote area in the country. And it's gonna be the more transparent and fair. And here is the list of countries we talk about. These are the almost 50 countries, including the developed and developing country. We also consider the Bangladesh and the Bangladesh and the other South Asian region in the study. So these are the scenario, and these are the policy implication and significance from this new banking system. And this sort of new banking technique enhances the add up the more people to the system, what we call it ensure the financial inclusiveness, and more particularly it is fintech inclusiveness. So thank you so much, Kausar, and thank you so much, Mr. Kausar and other fellows from the ICMAB, for having a chance to talk about this fintech services and new banking system. Thank you so much.
Thank you very much, Dr. Mohammad Abedin. Very neat and very informative, and also practical oriented. As I understood, you have taken research-based knowledge also in the presentation that has enlightened us in terms of about the concept. Though fintech normally in Bangladesh context, so far banking people or our members, those who are working in the banking arena, they are more enlightened about this particular concept, application, and way forward also. So for us, it is still lot many to come in the future. So the presentation you have made has significantly enriched our knowledge. In fact, I have also learned a lot from your deliberation. And of course, there are challenges in terms of accommodating or making the result. Like one of the result as we have take in the topic, like financial inclusion. So for Bangladesh context also, it has challenges like because of gender diversity, male, female is lacking behind in Bangladesh. Of course, as we know, urban, rural is lacking behind also. Of course, large businesses is little ahead. SMEs are in challenge. Bangladesh is still agro, as far as employment is concerned, agro-based economy. So rural farmers also are largely out of financial inclusion or financial, they're excluded actually. So that are challenges for Bangladesh. Of course, private sector is little ahead in terms of adopting these automated or various financial fintech tools and techniques for running their business and getting edge over competition. In recent time, COVID has given certain positive momentum, though over last 1 decade, Bangladesh or the globally fintech has taken momentum. But data said for Bangladesh context, the momentum got little reduced. In recent time, this fintech matters like initially of the 10 years, initially the speed was very high from 30% plus minus to 50% plus minus level came very sharply. But recently the momentum is not at the same pace. So there is challenge, but we cannot avoid this. It is part of life for many regions, just not that we are in fourth industrial revolution age, not for that also, for doing business competitively, flexibly, and also serving above or remaining competition and close to the consumer. As the presenter nicely said that it is about directly communicating with the customer and kind of an eradicating the traditional conventional banking system. It is already mentioned that branchless banking system. So I would not make it longer. So I would now request our honorable discussant, Professor Dr. Taimur, to please make your valuable comment on this. And also after that, we may open for few questions if our member have on the topic. I am giving the floor to Professor Dr. Taimur. Sir, thank you very much once again. We are very glad to have a discussion of your esteemed. Really, we are blessed from ICMAB to have you, and we want to have you both more and more in similar sessions. By virtue of this digitization, it become possible. Otherwise, it was completely unthinkable to have such esteemed session with your valuable input, valuable presentation. Over to Professor Dr. Taimur.
Thank you very much, Mr. Mohammad Kausar Alam and other esteemed guests, and including my dear younger brother, Dr. Abedin. I mean, it has been a pleasure actually working with Abedin, and although I'm holding a professor rank, I keep on learning from him in this domain, because this is something which has been, a contemporary topic. And Abedin is probably one of the leading academicians in the UK who is actually working on this digital finance, blockchain, and all these data science areas. So yeah, as you said, it is a great privilege to have him here and listening from him. So from his presentation, this is really a good one, an empirical evidence-based presentation that covers 77 countries in the world, including developed and developing countries. As a discussant, what I can actually highlight on is that definitely there has been huge progress in this area, and Bangladesh has made a huge progress as well, because we know the government is quite supportive of a digitalization policy in the economy. Recently, they're talking about a smart economy, moving towards cashless in society, which is supportive to the Sustainable Development Goals, 17 goals, by reducing illegal transactions and increasing transparency. These are quite positive. In terms of some numbers, and I recent developments in benchmarking the world. It says that 60% of the wealthy nations, advanced economy.
আমরা একটু ব্রেক হচ্ছে, শুনতে পাচ্ছি কম। সবাই কি শুনতে পাচ্ছেন? ডক্টর আবেদিন, আপনি শুনতে পাচ্ছেন?
না, একটু প্রবলেম হচ্ছে মনে হচ্ছে।
আচ্ছা, হ্যাঁ, আমিও শুনতে পাচ্ছি। নেটওয়ার্ক
Sorry, I lost connection, it seems.
জি স্যার আপনার এখন now we can hear you but we got disrupted for few minutes.
Okay, I think it's better to I switch off the camera. I think it's
Yeah, that
cause
might be giving more
bandwidth issue. Yes,
bandwidth,
okay,
yeah.
sorry about that.
Yeah,
What
sure,
I was talking about is the digital payments as a benchmark. You know, in the advanced world, 60% of the daily transactions are actually done through digital payment system, FinTech system. Whereas in the developing countries, only 1% daily transactions are done. So there is a huge opportunity to progress. But the good thing about Bangladesh is, as compared to this developing world experience, where 1% daily transactions are done, in case of Bangladesh, this is actually 7.8%, which is close to 8% daily transactions, which is equivalent of 3,646 crore taka per day. So this is a huge progress for Bangladesh as compared to the developing world. Internet users are about 39% in Bangladesh, whereas it's 46% in India, 21% in Pakistan. But in comparison to mobile money accounts, actually Bangladesh is leading in Asia, which is followed by Indonesia, Pakistan, and India. So this is also something good about Bangladesh. But now coming back to this inclusion issue that Dr. Abidin was highlighting, when you look at the inclusion issue, there are huge opportunity to actually progress. Now, as we said, Bangladesh is leading in Asia in terms of mobile money account. The problem here is you will see that only 45% male and then 20% female are representing the entire mobile accounts database. It means female population is only 20% here. Whereas if you look at the proportion of male female in Bangladesh, actually male is 49.5% now.
Yeah.
And females are 55%. So as compared to that, female participation of 20% in the mobile money accounts, this is quite alarming. So if you talk about financial inclusion, this is something that we need to look at very seriously, because without inclusion of ladies in all these activities, and we have seen how microcredit showed that inclusion of ladies can actually contribute economically in the country. So without inclusion of female in this process, we cannot really ensure financial inclusion. This is something to really look at very seriously. In terms of other issues that Dr. Abidin was talking about, trust. Yes, this is a huge thing, and this is connected highly to the cultural perception. I've seen some of the studies were talking about cultural perception. Some people don't really trust the system. Some people feel uncomfortable saving their hard-earned money on digital banking system. They feel that this is my money. It's more like a shopping digitally. If you don't go for physical shopping, touching things in your hand, you don't feel comfortable. Something similar here. So people don't feel comfortable in saving. So this is a trust factor, a cultural perception factor. Practically, there are some practical issues as well. There are sometimes deficiency of knowledge and skills. People are not, very good at doing these things. If you look at the previous generation, like people in our fathers, uncles' age, they use mobile phone for receiving and sending calls and messages only. So they don't really use mobile phone for this sort of activities. So there is always a knowledge and skills factor present here. So in this way, we are deprived of this population representing in financial inclusion. There is a problem with low literacy as well, digital literacy. This is very important. I think this is something needs to be incorporated in the education system. Plus, probably, there should be some schemes that can literate, as you said, in your comments. A large proportion of farmers are actually excluded from this net. So when we have this low literacy problem, we cannot really bring this population in inclusion. Now, before actually I go to the problem issues, I will go back to a metaphor of Bata. This Bata shoe companies. When we look at the half glass, half full, half empty glasses, it's the perception that how we look at. Do we take this as a problem, or we take this as a potential or a scope of further development? This in the 19th century in colonial Africa was opening. Actually, Victorian England sent a lot of representatives to check the African market to see the prospect of shoe in their economies. Majority of the people came back and reported that no, there is no hope, because majority of the people in Africa don't wear shoes. So there is no business opportunity. Whereas Bata representative went and came back. He said that nobody in Africa wears shoes. So there is huge market for our products. Now, when we talk about the frustrating part of the story of financial inclusion in Bangladesh, I would, instead of saying this as negatives or problems, I would call it as half full. So there is opportunity to cover up those issues. Now I can see that, there are some numbers I have taken note from my study. It says that 65% banks are operating businesses in Bangladesh. Only 10 to 15 of them offer internet banking facilities with app. And whoever is offering these services, the user experience is actually below average. It means there is huge opportunity to actually improve here. And it shows the potential of the economy to really push more on this. About 40% of Bangladesh population are actually millennials and Generation Z, who are 18 to 32 years old. But if you look at the proportion of mobile banking system and all that system, whereas we know 18 to 32 years are the most social media users. So if we can include them in this mobile banking system or fintech system, actually there is huge potential for Bangladesh to grow up. So going back to Dr. Abedin's presentation, overall it shows that Bangladesh is progressing quite well, but there are certain areas where we need to focus more on. For example, how to improve the savings in the Bangladeshi context, how to improve the institutional quality, as we know that recently we have come across some news that some of the banks are falling short of credits, and sometimes there are some money laundering cases. Some people are going to withdraw their money, they are not getting the money, there is no deposit in the bank, there is no reserve in the bank. So if these issues are present, actually that will provide a negative signal to the people who are potential to be part of the fintech system in Bangladesh. But overall, I would say that if these external landscapes related to economy and finance can be careful, we can be actually leading financial inclusion, not in but world.
Internet issue.
Yes, please.
Yes, I'm done. If you have any question, you can ask me, please.
Okay.
So yes, thank you, sir, for your very pertinent comment, enlightening and expanding on the very nice presentation from Professor Dr. Abedin. So now we would actually take a few questions. We don't have much time. So if there is any question from our honorable participants, we have around 130 participants joined, and we are very happy that you are keeping keen interest in this particular topic and joined today this evening. So we are please open your mic and ask the question to the resource person or our honorable discussant. So this is an opportunity actually to directly ask to very distinguished resource person and very learned discussant. So this is a rare opportunity for us. If you have any question, please raise your question now. So before any question come from the floor, so if I may ask a question to the honorable presenter, Dr. Abedin. So regarding the Bangladesh, of course, as I have mentioned that this fintech adoption or financial inclusion momentum, as we see that it is getting little challenged, or momentum or speed is of inclusion is little slowed down in recent time than earlier. So what is your observation, or what we can do in actually gaining the momentum further and reach to a developed world level or a decent level? So, but
Yeah, Mr. Kausar, yeah, thank
Yeah.
you so much. Yeah, actually, Bangladesh and part of India and Nepal, Bhutan have the same scenario nowadays. It is the market, not only the Bangladesh market, rather, the total financial system across the globe in the kind of fluctuating nowadays. It is because of varieties of event. On the first hand, it was COVID-19, but very recent one, it was COVID-19. After the
Yeah.
COVID-19, the Russia-Ukraine war nowadays facing the problem. Then it is the Middle East event. It was now Middle East event, Hamas Israel as well as Iran and Israel. And before that, it was 2014 financial disaster. So yeah, it is because of varieties of event, and it is that basically negatively impact on the market. It is not only the financial market, rather other domain, the market is badly impacted, right? So during the COVID-19 period, although the momentum slow growth, the growth rate very slow. Now it is the shaping. While it gonna be in the in a good shape, then the another event is coming. So it is the economic indicators. A lot of economic indicators is responsible behind of this. For example, one is the GDP, one is the per capita income. Nowadays in Bangladesh, the income disparity is so much so high. And the many people have a very small number of people have the huge per capita, but it's a getter part. The huge number of people, almost 95% people, total population, the per capita is very low. So this is the another dimension, and also it is the remote area. It may not possible to enter to the system into the remote area in the marginal people. Then also another dimension, it is the gender gap, the male female gap. The female class, it is the not able to contribute to the male counterpart. So that lot of varieties region, actually the growth rate is slow down. It is mainly it is external event. Also a part of internal event is responsible, actually internal factors also responsible, and the other from the regulators and the government part and the private sector also have the some responsibility as well to follow up the the growth rate, the inclusion system, financial inclusion system. It is the education, what you call the digital learning system, the digital education. So yeah, it gonna be the education is one of the main significant issue that gonna change our life. Okay, so it is the digital education, what you call it is digital education, digital literacy. We're gonna need to follow up these sort of things, to be honest. Then as well as the people financial richness, the people, the remote people, in particular marginal people, in particular the women, they're gonna be the part of the system. They're gonna be the need to be included to the systems as inclusion. So you need to follow up the internal factor as well, a couple of internal factor. So as well as the global economic system. So while the global economic system is stable, if it is gonna be the stable, it will be stable hopefully in the coming days. Then the internal mechanism also follow up, and accordingly the system gonna improve, the momentum gonna comes up again. The FinTech as well as the other technical devices and the aiding the people to the system. Thank you.
Ji, thank you very much. So we are actually fortunate to have Dr. Avedin, to have you as a presenter, because generally we hear about FinTech from the industry people. So today you are accounting background people, and also we have done empirical research on this very important topic. So I want to hear if you have any advice, since we are 130 accountants joined today in the session. So if you have any advice for us in terms of adaptation of FinTech, or based on your research experience, actually what we should do. In fact, we generally understand that in the future of accountants profile or work is actually, you cannot avoid this FinTech. This is a significant part of our life as an accountant while we are doing business. So what is your take on on the part of accountants' role in FinTech in future?
Yeah, thank you. Thank you, Mr. Kausar, distinguished fellow from ICMAB. Yeah, I talked about this issue to the Professor Selim sir last time, and he also asked me the same question. This is what going to be the follow-up to the ICMAB member, as it, the FinTech is a kind of, collaboration to the technique, collaboration to the, the AI and the finance, what we call the FinTech. Now it is the, we need to add up the accounting people to the system. Although the big data analytics, although the AI and the machine learning and the, the blockchain thing, this is going to equally applicable to the accounting. Not only, although it is, it mainly significantly have a significant role to the finance people or the finance domain, but as well as it has the, huge space to, add up to the accounting domain and accounting people. For an example, I have PhD student here with the Swansea University who is actually from accounting domain, who is not finance domain. He did MSc from Swansea. Now he's the senior, manager from the KPMG in Scotland. So yeah, we actually in the beginning we faced problem. How gonna we move up? Then I'm thinking it is the financial statement, for example. One example, it is financial statement, in the financial statement has many anomalies. In financial statement, some techniques. So we call it is window dressing technique. We're gonna make up the more colorful. So the external environment, external stakeholder gonna be attracted. So we're gonna detect those sort of anomalies from the system, from the statement, accounting statement. We took, say, for example, 100 company, for example, across the, European companies. So 100 companies, then we're gonna, detect the actual scenario, what it is, comparing to the, then having the, statement variable, financial statement variable and financial, the companies. Then we're gonna apply the data analytics tools, the machine learning model, and we detect the what sorts of anomalies available while we presenting this sort of statement to the annual to the AGM, to the general meeting, and we invite to the external stakeholder, invite to the investor, to the market. So yeah, this is kind of one example for the ICMAB people. For the ICMAB stakeholder, we're gonna follow up the small training, for example, how this sort of machine learning tools and techniques, how gonna the blockchain tools and techniques, how the big data analytics gonna apply to the accounting domain. And I offer last time, we're gonna have a training, for example, small training, the bit size training. So the bit size training, for example, one modeling thing, and applying that across the the 5 or 10 different companies, analyzing their financial statement. So this sort of the data, accounting data, and the technique, the machine learning technique and the big data technique, we're gonna apply those sort of technique and have a look what is happening. And across this training, the we're gonna enhance the skills of our resource person, who are the stakeholder of the ICMAB. So this is kind of example we're gonna follow up, and we can approach it. So
Thank you very much. Actually, we shall actually talk on this particular area with our Honorable President, Professor Dr. Mohammed Selim, your teacher also. He is very much keen also. He is actually traveling, as you know, traveling to USA, Canada. That's why he could not attend today. So we are at the end of the session. So we have one hand raised by one of our associate member, Utpal Chandra Devnath. Utpal, we are giving the floor to you. Please raise your question, and then we shall actually conclude the session by taking final comment from our honorable discussion, Dr. Taimur sir. So now over to Utpal for your question. Utpal, are you hearing us? You have raised hand. We can see another hand raised by Muhammad Saiful Alam. Whoever actually can talk, please raise your question so that we can attend your question. And yeah. So hand, now we can see the hands. Okay, I think, so finally, so we are coming at the end of the session. So we would again feel I would hand over the floor to our moderator. So before that, I am actually feeling very courageous to have final comment from our honorable, very distinguished sir, discussant, Professor Dr. Taimur Sharif sir. Sir, if you have any last comment, then we shall go to moderator for concluding the session. Professor Dr. Taimur Sharif, sir. I think sir is disconnected. Okay. If sir is not there, so now I would actually hand over the floor to our moderator, Mr. M. M. Motin Patwari, our treasurer and today's moderator, to please take the floor and do the rest of the proceedings to finish the session.
So
Yeah.
it has created more interest to our participant. I have seen that at least 4 or 5 they are in the queue, but we have given them the floor, but unfortunately there is no response. So we have the time limitation definitely, and Dr. Abedin and Dr. Taimur definitely they has given a quite a long time than we have expected. Definitely, it was a great session, and thank you, Dr. Abedin, and as well as Dr. Taimur Sharif for their time and their effort as well to give us the knowledge that they have gained through their research and as well as their study. And we have significant participants also. It is a holiday in Bangladesh. Despite all this, there was near about 127 participants. And we are also expressing our thanks and gratitude to the participant as well. So we are, with these few words, we are concluding our webinar. Thank you all and hope that we will meet you again.
Thank you.
Thank you.
Yeah, thank you so much. Thank you so much, Mr. Mutin, and thank you so much, Mr. Kausar Alam, distinguished fellow from ICMAB. I have a couple of questions over here in the chat box. If you allow me, then I can follow up the questions.
Definitely, sure.
Yeah. It is Mr. Alam, Bodiul Alam, who talk about the regulatory environment in the fintech. Although, it is complex, the regulatory bodies and their regulations and their approaches are so complex, and, it is not follow up in it gonna vary across country to country. Now, what is happening in the UK, what is happening in the European Union, not the similar to the, in Bangladesh. It is quite different in Bangladesh environment, or it is in the, less developed country environment. So yeah, how gonna we, overcome those sort of limitations in the regulatory bodies? It is not the concern for as an academician. This is not actually in the academic people hand. Rather, it is the academician, it is the regulator who actually control the market, right? It is the government, and it is the Bangladesh Bank, for example, right? So they're gonna more the fintech tools and techniques, the machine learning tools and techniques, for example, high tech techniques. So it is gonna be the more accessible to the people. The company, it is the bKash, for example, who gonna provide the services to the people. It is the mobile companies who gonna provide the services to the people. So they're gonna be the more accessible, their services, their products to the people. Okay, to the especially to the root level people, to the remote people. So, and the government and also the private sector, they're gonna be the more friendly. They're gonna be the user friendly, and they're gonna be the the regulators and the government. Their tools, their regulations gonna be the company oriented, and also the people oriented, user oriented. Accordingly, the system gonna be the more friendly and more usable. And the second another questions, what are the key challenges? Again, these are the challenges. Security and privacy of the digital finance. It is actually the privacy issues. It is mainly companies on the company's hand, who are the providing the services. Last time we talked about the bKash and other mobile companies. So as long as their security and their privacy issues are the significantly boost up and improve, then the the fintech services and the other products in the domain from the fintech and machine learning domain, they're gonna be the more accessible, and because people gonna be the more included to the system, right? So yeah, the security and privacy issues, it is definitely on the service provider hand. Okay, nowadays system gonna upgrade it. The system upgrade upgraded. So during these days and the upcoming days, we hope the security and privacy issues might be the more user friendly and the customer friendly. Okay. So yeah, these two questions. Thank you so much. These two questions I have been seen here in the chat box. No more questions. Thank you again, Mr. Kausar Alam, distinguished ICMAB fellow, and also the Mr. Abdul Motin.
So thank you. Thank you once again, Mr. Abedin. We will definitely take your expertise in the coming days as well. So thank you. And Dr. Selim, now he is in UK, no, sorry, in Canada. So he will also visit, I think, USA as well. He will come back and definitely he's our president. Probably you know it.
Yeah.
So we will meet again.
Yeah, I will be
Thank
very
you.
happy to support the
Okay,
ICMAB
okay,
in terms
thank
of the
you.
research and in terms of publications.
Okay.
I am
So
actually
thank
full-time researcher.
Okay, so thank you both of you and hope to see you again. Bye. Thank
Bye-bye.
you.
Thank you. Thank you.
হ্যালো, আসসালামু আলাইকুম। ওয়েবিনার কি শেষ? হ্যালো।